Hello, everyone, and thank you for joining us today. My name is Cassandra Celestin, and I am the Director of Pro Bono Initiatives at the City Bar Justice Center. Our mission here at the City Bar Justice Center is to further access to justice by addressing the unmet civil legal needs of New Yorkers struggling with poverty and systemic socioeconomic barriers. And one of the ways that we do that is by educating the public on pertinent legal issues. The City Bar Justice Center has a history of supporting New Yorkers impacted by disasters through a range of pro bono programming, including legal initiatives in response to disasters such as Superstorm Sandy, Hurricane Maria, and now Hurricane Ida, which had a devastating impact on many families, small businesses, and neighborhoods in New York City. Today, we have four attorneys from the law firm Pillsbury, Winthrop, Pittman, one of our pro bono partners, and they will be presenting on the topic of insurance and will provide information on how to navigate insurance claims after Hurricane Ida. And thank you for sending in your questions in advance. And if you have any questions throughout this webinar, please feel free to type that into the chat. I would now like to introduce you to our presenters. We have Janine Stanish, Benjamin Tiefsky, and Scott Greenspan. Thank you for being here today, guys.
Thank you.
Good afternoon, everyone. Thanks for joining us. Today, we're going to be talking about potential insurance recovery and other sources of recovery for property damage and interruption to business caused by hurricane-related damage. And this is a very timely topic in the wake of Hurricane Ida and also storms that our area has been experiencing recently. Unfortunately, flooding can be a catastrophic event, forcing people out of their homes, disrupting businesses. But on the bright side, insurance proceeds and government aid may be available to defray some of the costs associated with this damage. But be forewarned, and as anyone with insurance claims experience can attest to, the process can be fraught with complexities and traps for the unwary. So our purpose today is to give a high-level summary of the types of insurance that may apply to hurricane-related losses and other avenues of recovery. There are multiple lines of insurance that may be applicable for both individuals and businesses affected by hurricane-related damage. To name a few: homeowners insurance, renters insurance, flood insurance, and various types of business insurance. There are benefits and drawbacks to each of these types of insurance, and I'll go through a few of those in a little bit more detail. Homeowners and renters insurance policies are the most common type of coverage available to individuals and households. But unfortunately, those types of policies generally exclude flood. Now, flood is a defined term. It's a term of art in these types of policies. So you should not assume that a flood exclusion applies to any type of water damage or any peril that could accompany flood or is indirectly caused by flood. So, to the extent that there is, damage to an electrical system, for instance, that could increase fire risk, as an example, right? There may be sort of non-flood categories of damage covered by some of these policies. In addition, wind damage or damage caused by wind-driven water may be covered. Additionally, for renters or businesses that lease space, there may be indirect coverage available for flood damage under a landlord's commercial policy. So for example, landlords are often covered for lost rent in some cases due to flood. So perhaps, right, even if a commercial lessee or renter can't personally access flood coverage, there may be some kind of relief that can flow to that person indirectly. For people or businesses located in FEMA flood zones, they are typically required to carry flood insurance that's administered through the National Flood Insurance Program under the auspices of FEMA. In other words, government subsidized and administered flood insurance. That insurance for businesses is typically pretty limited because it only covers up to $500,000 worth of property. And in addition, does not cover business interruption, the lost income resulting from property damage. It may also not cover relocation costs or other perils that could accompany flooding, such as fires resulting from flood. But importantly, and as a lot of people are aware at this point, the federal flood insurance program has not really been adequate. And during Hurricane Ida, many people who lived outside of flood zones, including in parts of New York City like Queens, that were not near large bodies of water that were prone to flooding, suffered flood damage. And the same thing in central New Jersey. FEMA is, and this was in the works long before Hurricane Ida, in the process of trying to rectify that by re-examining and reassessing flood risk in various parts of the country. But the result may be that premium for people who are in sort of the most notorious flood zones will go up. In other words, as a result of having to provide flood insurance to more people, the people who are most vulnerable to flood may end up paying more. So that's something to keep an eye on in the future. The homeowners insurance and flood insurance we just discussed is typically reserved for individuals, although businesses can also procure NFIP flood insurance. But businesses can also have access to commercial property and business owners policies that may have dedicated flood coverage, which usually must be purchased for an additional premium. And this coverage often applies in excess of NFIP flood insurance. But it also covers business interruption and extra expense, including relocation expenses. So it's potentially a broader coverage that's available to businesses who are in a position to obtain it. I'll now turn it over to Janine, who's going to discuss some specifics as far as preparing a claim.
Thanks very much, Ben. Part of what people are, of course, dealing with after suffering a loss is, what do we do next? And hopefully you all can see my 6 tips to maximize recovery on the screen, and that was a smooth transition in terms of our change of screen. But what really matters here is you want to be thinking about what coverage you have, and you want to be ready to deal with the loss before one occurs. So keep in mind, most people actually never obtain a copy of their insurance policy before they suffer a loss. A lot of small business owners, a lot of homeowners only go out to seek a copy of their policy after suffering a loss. So there's some work you could do leading up to any type of damage by making sure you have your policies in hand and accessible to you. And you want to review those policies. To Ben's point about the definition of flood, policy language varies. And although it's not someone's favorite thing to do is spend time reviewing an insurance policy, although 3 of us do that on a daily basis, what you want to look at is, what does your policy actually cover and what is excluded? And it's helpful to have some sense of that in advance. And often there's a lot of different coverages that may be available. It's not always narrow. So Ben spoke a bit about that there could be property damage coverage. Some policies have business interruption coverage. There could even be coverage relating to civil or military authority. And while we're focused today on Hurricane Ida, these are things just to keep in mind for other future losses as well. That the coverage can be broad, it can be narrow, it really depends on your policy language. And there are terms in your policy that will provide specific deadlines. There'll be deadlines about what you're supposed to do with respect to providing notice of a claim. There may be deadlines in what you have to submit to your insurer. And so you'll want to keep those in mind as well. And if you haven't already submitted a claim, there are instances where it could be helpful to submit notice of potential claim early on to ensure that you don't forfeit any of your rights. So definitely pay attention to those deadlines. When you're dealing with a loss and with a catastrophic loss in particular, often people don't think immediately about insurance, but you do want to do your best to be documenting and keeping track of your expenses, keeping track of your receipts, and doing what you can from a record-keeping function so that you'll ultimately have something to submit to your carrier to substantiate your claim. And depending on what happens with the progression of your claim, you may need to engage experts. For example, a forensic accountant may be needed in order to quantify a business interruption loss. You may also need an expert dealing with issues of causation. And whether or not that's an appropriate route will depend in part on what type of losses you suffer, the strength of your claim, of course. But there are resources also that often policyholders need to retain in order to push their claim forward. And Ben touched also on FEMA and access to government funds. And we're going to go into detail with respect to those potential availability and resources towards the end of the presentation. So I spoke generally about obtaining and reviewing your insurance policies. You want to look at what coverage you have purchased, whether or not you purchased additional endorsements that may change policy provisions. And when you think about a loss, you don't want to be thinking narrowly. You want to be making sure that you're reviewing all of your relevant policies and considering all of your potential losses and damages. And I spoke about different deadlines that may exist in your policy. There's several different deadlines that could come to light. One is providing notice of your claim. Some policies provide a date certain. Other policies say language such as soon as practicable. But regardless, you want to make sure you get your notice in early if you suffer a loss or you have a claim. There's often a proof of loss requirement that you have to submit details about what you incurred after suffering a catastrophic loss. And often there's a service of suit limitation in a policy that provides a deadline that if you are still in a dispute with your insurance company, it provides a deadline by which you must file a lawsuit to obtain coverage. And if you don't file by that date, it acts as if a statute of limitations, and you could be precluded from bringing a claim against a carrier. So those are deadlines to keep in mind when you're reviewing your policies. But one thing's clear, if you don't provide notice, you're never going to get coverage because the insurance company is not going to be coming out looking for you. It's going to be dealing with the claims that are submitted. But if notice is late, you also could be in a position of having an insurance company deny coverage on the basis of late notice. And that's why these deadlines matter. You don't always have to provide the most robust characterization or details about your claim. Often you could just provide some specific general details about what has occurred, and that will help trigger the process, the claim adjustment process. Most people will engage with their broker to submit a claim. And things to keep in mind is that if you end up in the unfortunate situation of having to pursue some type of litigation, you want to keep and be mindful of the fact that communications with brokers wouldn't be privileged and could ultimately end up in discovery. So that just goes to say you want to be mindful of what you're communicating and writing and what information you're sharing. The brokers can often be a helpful resource to get information about next steps. you want to keep your insurance company informed after you submit a claim. And part of that is because under the policy, policyholders do have certain obligations to mitigate their losses, to ensure that you're trying to do what you can to prevent future damage. And so there are not only obligations as to the insurance company and what they are supposed to do with respect to providing coverage, but there are also certain obligations on the policyholder. So keep that in mind when you're reviewing your coverage and your policies. And with respect to experts, keep in mind that often if you end up in a situation, even if you have coverage, one area that is always contentious is the quantification of damages. So you want to be careful in terms of calculating your losses. You may need expertise or an expert to help you do that, but also maintaining the backup. And if you aren't able to further engage with your carrier because they've denied coverage, I'm going to pass it along to my colleague, Scott, who's going to provide some tools and some thoughts on what to do if your insurance company denies coverage for a loss.
So what happens if your claim is denied? Well, the first thing that I would say is don't take no for an answer. Don't assume that the insurance carrier's denial of your claim is correct. It may not be. Carriers make mistakes. They do not always get it right. That I can tell you. I used to represent them, and claim handlers are people too, and they do not always get it right. Sometimes they miss policy language. They don't find the right endorsement or part of the policy, and they do not always get it right. And also, very important to remember is the insurance carrier's business models sort of assume financially that most policyholders will not contest claim denials. That is, they expect that 90% or more of policyholders in response to a denial of coverage will simply accept it. So my strong recommendation to you would be, if you do receive a denial, don't just take it at face value, but do some more digging. And with that, we'll go to the next slide, and I'll give you some ideas of things that you can do to sort of develop an action plan to see if you can sort of dislodge that denial and get the carrier to take it back, to retract that disclaimer, which is the goal of doing this. First of all, if you haven't already done it, and Janine's advice was spot on, that is, when you first have a claim, you want to ask for a copy of your policy right away from if you have it at home, great. If you don't, ask your broker or the carrier for it. But if you haven't, certainly if they deny a claim, you really need a copy of that policy, and you got to start looking at it. And it's very important that you ask for a complete copy of the policy, not just the section that the carrier cites in the denial, because very often there may be another section, another part of the policy, an endorsement, that is, some language in the back of the policy that may very well change everything. I've had cases where, for example, a carrier denied coverage based on the pre-printed language in the front of the policy. And lo and behold, there was some endorsement that they added on later in the back of the policy that changed the coverage 180 degrees and undid what the pre-printed language said. And if there's a conflict, if there is an endorsement that contradicts what's in the main body of the policy, that endorsement actually controls. So you want to ask for a complete copy of the policy. Once you get it, you want to carefully review it. And you want to look at it against what the insurer claimed in the disclaimer letter, that is the letter telling you that you have no coverage. You want to compare that policy with the disclaimer letter and see if the carrier got it right. Are they completely quoting the coverage provision? Are they selectively quoting? Are there other coverage provisions in there that they somehow just didn't quote? Is there an endorsement that changes everything? Now, if it's possible, if you have the means or you have friends, it's always best to have some experienced insurance coverage counsel take a look at the policy, and the disclaimer and tell you if the carrier has gotten it right. Because like I said, carriers don't always get it right, despite what they want you to think. So we'll go to the next
Scott,
slide. Yes.
Scott, one thing I would add, because I think you're raising an important point, is one of the reasons why it's very valuable to have a copy of your policy before you do anything is because what you don't want to do is provide notice and characterize your entire claim as falling within a policy exclusion. So for example, Ben had referenced that some policies have a flood exclusion. Submitting a claim that says, I have a flood claim, you are inevitably going to get the denial that Scott's referring to. So that's why it is helpful to take a look at your coverage before doing anything, before even communicating with your carrier.
That's right. That's a very good tip, because there may be some other claim, right? Maybe maybe you had damage from the wind or something like that, and not just from the water. That's 100% right. And also, yeah, that's very important. It is so important to have a complete copy of the policy, because really the carrier's position is going to live or die on the piece of paper that is the contract they sold you. And in New York, the court is going to strictly construe that contract, that insurance policy, against the insurance carrier who drafted it. And if there's anything in that contract that is unclear or susceptible to more than one reasonable interpretation, the courts will generally construe that against the insurance carrier and in favor of coverage. And so it's very important to get a complete copy of that policy. So the next slide will be to contest the carrier's coverage denial. That is, after you've taken a look at the policy against a disclaimer, and if if there's anything out there that seems like the carrier missed something, didn't look at the claim properly, there's some other basis for coverage that they didn't mention, or if they really didn't do much of an investigation at all, you probably want to write them a detailed letter. Again, if you have a lawyer in the family or friend, you probably want to try to get their assistance if you can. You want to write a detailed letter to the carrier contesting or sort of protesting the denial of coverage. In that letter, you'll want to point out any holes or inconsistencies in the carrier's analysis. You want to point out any omissions or mischaracterizations that the carrier made of important policy language in the disclaimer letter. This has certainly happened in my career. Like I said, I've had situations where a carrier has pointed to one provision and said, ha, there you go, no coverage. And they forget about some other provision that reverses that, or that provides coverage in some other part of the policy. So if that happens, you'll want to call them out on it in the disclaimer letter. You want to put that in writing and put it right back in their face and say, you're wrong. You didn't look at this other part of the policy. So we can go to the next slide. Thank you. You also want to, in that letter, especially document if the carrier didn't do much of a claim investigation, which often happens. Often claims handlers will have a tremendous, what they call pending. That is a huge load of claim files, and sometimes they will just blow through these files as quickly as they can to get them off their plate, to lower their pending. And so you want to call them out on it. If they didn't go visit your property, if they just sent you a disclaimer letter the day after you filed the claim, or 2 days after, or 3 days after, without asking you any questions, without going to your property, you probably want to call them out on it in your sort of pushback letter contesting the denial. You want to demand they visit your property if they haven't. You want to demand that the carrier conduct a meaningful and comprehensive investigation of your claim. You want to maybe demand an in-person meeting with the insurance adjuster who told you have no coverage. And you probably want to offer to supply additional information concerning the claim to assist the carrier in better evaluating the claim and in potentially retracting its disclaimer. So those are things that that are sort of good ingredients in what I call a pushback letter. that is a letter contesting the disclaimer of coverage. We can go to the next slide. Okay, thank you. Okay. Now, what happens if, after you've made your pushback letter attempt or several pushback letter attempts and the carrier is not budging, which sometimes will happen? You really then come to a fork in the road. One fork in the road is litigation. There are pros. You get to go in front of a court and a judge. Carriers are not the most popular defendants, especially with juries in New York. But there are downsides. Carriers are in the business of litigation. They will hire some lawyers at probably not that necessarily high an hourly rate, and they are just in the business of defending these claims. They can outspend you and outlast you. So it's expensive to litigate against the carriers. It's time consuming. It'll take you away from your work. It'll take you away from your personal stuff. Carrier doesn't care because this is just what they do day in and day out. And also, even if you win in New York, it's highly unlikely, except in very limited circumstances, that you will recover your attorney's fees, even if you win. In most cases, there are exceptions, but generally not easy to get your attorney's fees in New York, even if the carrier made a mistake. So litigation is not always the best option. Depends. If you're well resourced and it's over a lot of money, that's different. If you're not so well resourced, it's not necessarily the best option. There was another option that very few policyholders really explore, but I can tell you, carriers are often really afraid of it, and that is option number 2. That is the complaint to the New York Department of Financial Services. In New York State, the Department of Financial Services regulates the insurance industry. The way it works is, in the United States of America, insurance companies are regulated not by the federal government, but by the 50 states. And in New York, the regulatory body to do that is the Department of Financial Services, which is run by a superintendent appointed by the governor. There are some benefits to filing a complaint with the Department of Financial Services. Number one, it's free. It costs you nothing. The Department of Financial Services will investigate your claim. Insurers I can tell you, are often afraid of these complaints, and they will usually refer them out of their claims department. That is the part of the insurer who told you had no coverage. The claim will often be taken right out of its hands and put in the hands of the legal department at that point. And that is especially the case if your complaint alleges a pattern of what I call market conduct. And that is, if you can show, and you've got to have good faith for this, that the carrier didn't just do this to you, but did it to a lot of other consumers. You're on a block, and they did it to all of your neighbors too. Joe Blow Insurance Company sent the same disclaimer letter to everyone on my block. They never came out to investigate. They cited the same exclusion, and yet there's some other provision in the policy that provides coverage. This is a pattern of market conduct. I put that in my letter I put that in my complaint form to the Department of Financial Services. Let me tell you, that will get the carrier's attention, and it will very likely get the attention of the Department of Financial Services. That is a kind of claim insurers really don't want, because it may cause the Department of Financial Services to undertake a market conduct investigation. And that is, the department will not only look at your claim, but it will look at the way that carrier handled all of those claims. And that gets very expensive for the carrier. It's their whole business model gets opened up to discovery and investigation. They do not like that, but you have to have a basis to do it. And I'm telling you, and it has happened for me when I've had cases where I made a market conduct complaint, and it resulted in the carrier paying a settlement, even in cases where that claim may or may not have been covered under the policy, but the carrier did something bad to a lot of policyholders. The carrier just wanted it to go away. And sometimes they've settled cases because of it. Next slide. The next slide relates to how you file a complaint with the Department of Financial Services. You go on a website, there's an online complaint form. This is the website address. You click on this link, on the first bullet point, and then this opens up to a web page, and you click on this other link in it called DFS Portal, Department of Financial Services Portal, under the consumer complaint header at the top of the page. When you click on this link, that opens up an online complaint form. You fill it out. There is another way to get the Department of Financial Services to even give your claim even more attention, and that is, let's get a little political, because after all, the Department of Financial Services is an arm of the governor. It's a little bit political. It's a political agency. It's a government agency. I would, if you really want some attention focused on this claim, I would not be shy, and I'd call my friend, my local assembly member and my local state senator, and tell them about my complaint and ask them to follow up with the Department of Financial Services and send them a copy of, and so I would give my state senator, my assembly member, a copy of my complaint. I might go see them in their office, and I probably also would send a copy of my complaint to the adjuster who signed the disclaimer letter. These are the kind of things that, if you have a legitimate complaint, are going to get the carrier's attention, and they're going to get the attention of the Department of Financial Services, or at least they are more likely to do so. Now you say, okay, that's great. What kind of things can I put in this complaint? And that's really the focus of the next slide. New York, as many states around the country, has what's called the Unfair Claim Settlement Practices Act. This is a law that our legislature has passed. It's section 2601 of the insurance law. And it prohibits insurance carriers conducting business in this state from engaging in certain defined unfair claim settlement practices. Now, what are they? Well, I'll list them for you. These are the ones that are in the statute, the law. An insurer cannot knowingly misrepresent to claimants, that's you, pertinent facts or policy provisions relating to coverages at issue. So this is the scenario I told you before, where a carrier says, I'm writing the disclaimer letter, and here's this provision in the main body of the policy, and it says you have no coverage. And they didn't tell you about this endorsement that undoes it. I've made complaints under exactly this provision and gotten disclaimers retracted after I made complaints to the Department of Financial Services. This works if you have it. Okay, number two, an insurer cannot fail to acknowledge with reasonable promptness pertinent communications as to claims arising under its policies. If they're blowing you off, if you're writing pushback letters and they are simply ignoring them, well, there's your weapon. Number three, an insurer cannot fail to adopt and implement reasonable standards for the prompt investigation of claims arising from its policies. Again, if they're blowing you off and you know it, I would probably allege this. Next slide. Okay. Two more. An insurer can't do this. Not attempting in good faith to effectuate prompt, fair, and equitable settlements of claims submitted in which liabilities become reasonably clear. And with respect to a property claim, like a hurricane damage claim, after receiving a properly executed proof of loss, that's that documentation on a form that Janine had talked about before, where you particularize your claim, all the details, and you give it to the carrier. An insurer has to advise the claimant of the acceptance or denial of that claim within 30 working days. If you have submitted your proof of loss and they have blown you off and haven't answered within that 30 working days, you may have them right on this. And this is a ground to go to the Department of Financial Services and say they broke the law. Finally, the last thing the carrier can't do under the Unfair Claims Settlement Act is they can't compel their policyholders to sue them to recover amounts due under policies by offering substantially less than the amounts ultimately recovered. So if you've got this covered claim and you've got, $100,000 of losses and they're offering you $10,000 and they're forcing you to sue, and it's very clear this is what they're doing, you may have a complaint against them for doing this. Okay, we can go to the next slide. Now, here's the good news and the bad news. The good news is there are actual civil penalties to insurance carriers who break the Unfair Claims Settlement Practices Act, who violate it. It's $500 per violation, and it can add up to big numbers if the insurer has engaged in a market-wide pattern of doing this against policyholders. They may have violated 3 of these against you, But let's say they've done it to, 10,000 policyholders in this hurricane. That can be serious money. And that's this whole market conduct investigation thing that they're like super afraid of, that they do not want to deal with. But to be clear, this is not something that you can go to court and sue on. The Unfair Claims Settlement Practices Act, only the state can sue on. And it does that by bringing a civil lawsuit against the carrier. But again, it is a weapon that you can use by forwarding this complaint form on to the Department of Financial Services. So this is sort of an action plan that you can do that we would recommend if a carrier denies coverage. And in a minute, I'll turn it back over to my colleagues. Just a couple of things building on what they said. Janine talked before about the service of suit provision, and that is there is a time limit. It's often 1 year, or depending on the policy, sometimes 2 years, and it often runs from the date when the damage occurred, like when the flood occurred, not necessarily the date when you submitted a claim. And in New York, it often applies even if the carrier is still adjusting the claim, still going back and forth with you, still saying we don't have enough information to determine the claim. It doesn't matter. In most cases in New York, even if they're still so-called adjusting the claim, if you don't sue within that 1 or 2 years, depending on the policy's language after the loss, you can still be out, depending on the language of the policy. It varies state to state, but in New York, it's often enforced in pretty strict terms. And lastly, Janine also talked before about how important it is to recognize that coverage, that communications with your broker are not privileged and can often be subject to discovery from the carriers. A case in point, if you write an email to your broker and say, is my claim covered? And the broker writes back and says, no, it isn't. It is possible the carrier may very well try to get that communication in discovery. I'm not going to predict if they can get it or not, but I can probably predict that they will try. So that's all I have. I will turn it back over to Janine, who's going to continue on, I think, with some potential sources of government assistance, or that may be Ben. I'm not sure.
Thanks, Scott. So in addition to potential insurance recovery, there are myriad options, thankfully, for potential aid from the city, state, and federal government. And some of them are sort of new and unique in the wake of Hurricane Ida. And I'm going to touch on a couple of those in particular. First of all, for New York City residents, the Office of the New York City Comptroller has a program to disperse city funds for flood relief for flood victims. And this is unique in that in the past, claims that are filed through the Comptroller's office have been limited to claims involving the city of New York. So this is a broader, from what I understand, mandate to provide relief to victims of Hurricane Ida. And if you visit the Comptroller's website, there's a process it describes the process for submitting flood loss claims, and they can also be submitted in person. In addition, the state has a program which I think responds to the fact that FEMA benefits are typically only available to citizens or people on the path to citizenship. The state is offering aid specifically to undocumented New Yorkers through the New York State Office of New Americans, the ONA, and it has earmarked $27 million in aid to be distributed through nonprofit organizations. There are eligibility requirements for that, and there's a deadline that's coming up on November 26th to apply for that aid. A bunch of local organizations participate in that. There's a hotline for additional information. And I think, going back to the Comptroller program, and then again, the New York State Assistance Program for Undocumented People, Part of this is also a response to the phenomenon I mentioned in the beginning of the program, which is that many people in areas impacted by Ida did not have flood insurance because they didn't live in the zones in which flood insurance was required, or perhaps they were undocumented, or in some cases living in illegal rental. And the traditional sources of governmental assistance may not be available to those people. So thankfully, there are some options outside of the conventional state and federal aid. But turning to the conventional sources of aid, FEMA is sort of the go-to agency at the federal level and offers various types of assistance to homeowners and renters and also businesses, including repair of the premises, cleaning and sanitizing costs, right? So flood doesn't just directly damage property, but can result in unsafe and hazardous conditions, conducive to mold growth, for example, that has to be especially remediated, which can be costly. And FEMA also provides renters assistance for renters. There's a specific program for individuals and households through which claims can be filed, providing direct financial assistance, temporary housing, rental assistance, and other funds. Aid is limited to 18 months after the date of the flood event. Businesses and residential landlords may qualify for other types of aid under the auspices of the Small Business Administration, which I'll get to in a moment. Other eligibility requirements for FEMA aid in most cases include inability to tap insurance for flood-related loss. And then there are restrictions as well in that FEMA doesn't cover business interruption typically for businesses. So for businesses that have access to flood insurance, and also for homeowners, some combination of insurance and governmental aid may be the way to maximize recovery. But just like preparing an insurance claim in the manner that Janine took us through, FEMA claims also have to be supported with documentation, photographs, and other evidence to prove up the loss. And the more of that can be done as part of the application package, the more likely an application for aid is to succeed. There is an appeal process should FEMA deny a request for aid, but better to, in the first instance, provide as much documentation as you can. I mentioned earlier that FEMA has a special assistance program for renters, which can include rental assistance, utility costs, and other expenses. And that has its own eligibility requirements as well. Businesses, in addition to FEMA aid, may be eligible for low interest loans to defray the costs of repair and business interruption from the Small Business Administration, as well as commercial landlords and residential landlords. And those programs have their own deadlines. Interestingly, the SBA program has a separate application process for business interruption, or at least a separate deadline. Janine mentioned this in the context of preparing an insurance claim, but for businesses who are damaged and have to temporarily close or relocate, or somehow or other limit their operation as a result of hurricane damage, it's important to measure those business losses, ideally with the assistance of an accountant, but at the very least with documentation showing lost revenues and extra expense associated with trying to get the business back up to normal operating levels. I want to leave it at that so that we have time for questions. And I think all three of us are happy to answer questions that the audience may have.
So I'm going to go through some of the questions that were asked in advance and some questions that were asked during this webinar. Some of it may have been covered already, but you could just answer the questions directly. So the first one is about a claim that was already denied by an insurance company. And the insurance company said that they're not covering water damage. So there seems to be, questions as to what should they do now.
So you'll want to take a look at your specific policy and also take a look at how you described your claim when you submitted it to your insurance company. A key area to take a look at is what exclusions exist in your policy. And as Scott put it earlier, you don't want to take the insurance company's word for it when they cite different policy language. You want to go back to the source, look at the language in your policy, and see what the insurance company is relying on for purposes of denying coverage. So it could be, for example, that your policy has a flood exclusion, but of course it matters how flood is defined in that context and how broad and narrow it is, because you still may have coverage for water-related losses. For example, rain, or wind-driven rain may still be covered. So you really want to go back and look at your policy, compare that to the denial letter. Because in the denial letter, they should set forth the basis for their denial and what policy language they're writing, they're responding to or relying on for purposes of their denial. And then the next step really will be filing a response. So submitting a letter response to their denial, setting forth your position as to why there is in fact coverage.
Thank you, Janine. I believe Benjamin covered this, but there was a question, is it too late to file a claim with FEMA?
No, it's not too late. Various FEMA programs have differing deadlines, but I don't believe that any of them have passed at this point, but I would recommend going to the FEMA website and verifying. But short answer is I do not believe that it's too late.
There's also a question if insurers are denying sewer backup claims, citing flood as the cause. And there's also a statement that claims were paid after Sandy. And so they're wondering if that is the same case after Hurricane Ida or if it's something different now.
I feel like a little bit of a broken record, but it will depend on your policy language. Ben and I have actually litigated a number of cases dealing with flood exclusions. Sometimes flood is specifically defined to include sewage backup. There's also, after certain catastrophic losses, not limited to a hurricane. But what you'll see in the insurance industry is after there's a certain catastrophic loss, insurers will add exclusions to their policy as part of their development of coverage. So while you may have gotten coverage for a Sandy sewer backup claim, you'll want to see if your policy language has changed such that they've added a specific exclusion for that, or if they've changed any of your defined terms in your policy. So it's not a given that just because they paid a claim one time, they're going to pay it on future claims, because policy language does change. If the policy language is the same, that's something you definitely would want to point out in a response to a denial, though.
Thank you. Does FEMA cover personal property damage for renters who choose to stay in their rental unit?
I think it depends. I mean, I presume the question is, right, who choose who choose to stay when flood warnings have been issued and don't remove property. I mean, if that's not the question, let me know. But typically, yes. To the extent that FEMA rental assistance aid would apply, I don't think there's a distinction between renters who vacated or who chose to stay.
Thank you. Trying to see if there are any other questions. There are questions about grants to small businesses, but I believe you did answer that. Benjamin, and I just want to make sure everything has been covered. There was a question about the SBA deadline of November 4th. There's a question if that's only for businesses. Some residents are just getting their FEMA letters now.
Yeah, I actually don't know the interplay between FEMA and SBA deadlines and whether there's some extension or other process for SBA relief if FEMA has not provided full, full coverage, so to speak. So I would definitely consult the SBA, website and other information on that.
And one of the last questions is also in regards to a water sewer backup. There is a water sewer backup rider on a policy, but the insurance carrier still denied the claim. And so there's a question as to what other agencies this individual can reach out to, given that the damage was caused by water sewer backup.
Thankfully, FEMA aid, for example, is not sort of coextensive with flood insurance. It's broader and applies to, in theory, all disaster-related loss. So, to the extent that sewer backup relates to the storm, which I presume it does, I would go to. I would start with the sort of traditional sources of government relief, like FEMA. One interesting point that we've seen in some of our flood claims, by the way, is that sewer backup, in some cases, arguably occurs not just because of flood, but because the storm drains and other systems are not designed effectively, or as happened with Hurricane Katrina in New Orleans, a lot of debris from previous storms had built up and caused the storm drains to overflow in such a way that they otherwise might not have. And policyholders in some instances were successful in saying that flood was only, under a policy with a flood exclusion, right, flood was only a contributing cause, but not the sole cause of the loss, and we're able to recover. So, it's difficult sort of to do the forensic analysis of what causes sewer backup loss, but there may be arguments, and this goes to Janine's point of retaining experts and consultants who can really opine on the cause of loss.
It's an interesting question. I'm reading the question about the water sewer backup rider on my policy, but my insurance carrier denied the claim. The coverage and exclusion cancel each other out. Oh, I was told my claim was denied based on a business decision and interpretation. Well, that's interesting. Wonder I would love to see that one in writing. That's a really interesting one. I see you filed with DFS and it's pending. Like I said, if you have any friends with or neighbors with this policy, if you can get them together, and if the same thing was done to them, the more of those neighbors you can band together and package and send to DFS with an allegation of market conduct, and get your state legislators involved with DFS, all the better. That will mean more pressure, especially if there's some truth to the statement that that it was being done based not on the policy language, but on a business decision. That sounds like you may have hit something there.
Okay, I think we did cover all the questions that we have received so far. So I do thank you to everyone who joined us this evening. Thank you, Benjamin, Janine, and Scott for presenting today. Just so that everyone is aware, this webinar has been recorded or is being recorded. And so you will be provided a link to this webinar if you want to watch it sometime after today. If you have any questions, we at the City Bar Justice Center, we do have a legal hotline. So if you have IDA-related questions, you can call our legal hotline or fill out an online inquiry. And thank you again for joining us this evening.
Thank you, everybody.
Thank you.
Good night.